Wall Street is taking a pause today on the occasion of Martin Luther King Day, so financial markets are trading sluggishly today. This week is loaded with important events and hot forecasts. Despite the doom and gloom on a Friday, the benchmark stock indexes closed the week in the green, and the banking sector contributed to weekly gains. The Dow Jones climbed by 112 points or 0.33% on Friday. The Nasdaq gained 0.71% intraday and closed with the biggest weekly growth. The S&P rose by 0.4% to close at 3,999 points. And today, US financial markets are short. Market sentiment is cautiously pessimistic. Futures on the stock indexes inched down in the pre-market, and the S&P 500 is expected to trade in the tight intraday corridor between 3,980 and 4,010 points. The S&P 500 and the Nasdaq closed on a Friday at the highest levels in months. The three major stock indexes looked strong growth last week. The S&P has jumped by 4.2% in 2023. Besides, the VIX index, also known as the volatility or fear index on Wall Street, closed at a one-year peak. As the corporate season has been underway, the banking sector provided the S&P with the strongest support. JP Morgan and the Bank of America reported better than expected corporate earnings. On the flip side, Wells Fargo and Citigroup fell short of expectations. The stocks of the four giants propelled the rally of the S&P 500, which spiked by 1.6%. The first corporate reports encouraged a recovery in the stock indexes and gave investors food for thought. Wall Street's largest banks amassed massive funds for a rainy day in the face of a looming recession. They also reported downbeat results of the investment activity. Following the decent reports, investors adopted the wait-and-see approach. The survey by the University of Michigan propped up market sentiment on Friday as the Consumer Confidence Index improved and inflation expectations declined to the weakest level since the spring of 2021. As for other corporate reports, the shares of United Health Group rose because the company's profits surpassed Wall Street expectations in the fourth quarter. The shares of Delta Airlines dropped by 3.5% because the company predicts a lower than expected revenue in the first quarter. The trading volume on a Monday is thinned by the holiday, while US markets are taking a breather. Davos is hosting an annual World Economic Forum. Among the speakers of the high-profile event are ECB President Christine Lagarde, Germany's Chancellor Olaf Scholz, NATO General Secretary Jens Stoltenberg, and China's Vice Premier Liu He. All in all, 2,700 leaders from 130 countries will take part in the forum, including CEOs of JP Morgan and Goldman Sachs. Forum participants are discussing burning issues such as the cost of a living crisis, the threat of natural disasters, geopolitical conflicts, and inability to curb risks of climate change. The World Economic Forum conducted a survey which revealed that two-thirds of the polls foresee global recession in 2023. Almost 18% think that a global recession is highly probable, and this share is twice bigger than the one in the previous survey held in September 2022. Only a third of respondents think that a recession is unlikely this year. As for inflation, the survey detected large regional differences. 5% of China's analysts expect high inflation in 2023. Roughly 57% are braced for high inflation in Europe, where soaring energy prices infected the whole economy. Most economists foresee further monetary tightening in Europe and in the United States. Besides, central banks have to balance the risks of a too aggressive and too soft tightening. Apart from forecasts and speeches at the forum, traders will assess data on the global inflation, which might destroy hopes that the worst has been left behind. The economic calendar reminds us about U.S. retail sales data. This indicator contracted in November to the biggest degree for the last 11 months, and the second month of a sharp contraction will prove that aggressive tightening has been pushing the economy down. Retail sales are expected to shrink by 0.5% in December, after a 0.6% decline a month ago. As for corporate reports, Goldman Sachs and Morgan Stanley are due to report on their quarterly results tomorrow. The US dollar index opened today with a slump to 101.7, but later it settled at 102 points. Having gained 0.1% intraday, the index is likely to hold in the corridor between 102.10 and 102.40. The US dollar opened the week in the red, having plummeted to the lowest level in 7 months against its rival currencies in Asian trade. The yen was the focal point as traders are betting on the Bank of Japan's revision of its policy on government bond yields. Each of the top 10 currencies benefited from the US inflation data and advanced against the US dollar. The inflation released last week confirmed waning inflationary pressure, which might assure the US Fed to halt its cycle of monetary tightening, perhaps after the meeting in March. The Fed's aggressive tightening is the main reason why the US dollar index increased by 8% last year. At the present, Fed funds futures suggest a 94% chance that the Fed will raise the official funds rate by 25 basis points in February. With such prospects, the US dollar finds it hard to extend its growth. Bearing in mind a flood of inflation data and macroeconomic forecasts, the US dollar could regain its footing and be in favor with the investors as a safe haven asset. The Canadian dollar is trading quietly at around 1.3990, and the USD card pair is trading almost flat intraday within the corridor between 1.3380 and 1.3420. The loonie is anticipating a report of a crucial importance this week: Canada's inflation data. Meanwhile, the Canadian dollar depends on the US dollar and oil prices. Crude oil is trading lower due to shaky optimism amid reopening China's borders and virus resurgence. Gloomy forecasts at the forum in Davos do not add to optimism. Brent crude slipped by 0.6% to trade at $84.72 a barrel. WTI shed 0.7% to trade at $79.23. Both benchmark trades rose by more than 8% last week, and the sharpest weekly growth since October. Crude imports to China expanded by 4% in December on year. Investors are alert to OPEC and the International Energy Agency, which will release their monthly forecasts this week. The crypto market went through a rough weekend. Bitcoin managed to overcome the level of 21,000, having jumped by 5% on Saturday. Later, the token lost most of its gains. The cryptocurrency closed last week with a growth of 21.9%, the most significant growth since February 2021. Moreover, the token added 27.6% from a one-year low at 16,496 recorded on January 1. Today, the flagship crypto is trading at about $20,800. Bitcoin futures indicate bullish sentiment and suggest a recovery to 21,535 in the months ahead. The bullish reversal correlates with the improvement in the macroeconomic environment and the growing risk mood. Some crypto fans foresee historic highs for Bitcoin in 2024. Skybridge founder Anthony Scaramucci predicts that Bitcoin will trade in the range from $50,000 to $100,000 in a couple of years. The expert believes that the token will be able to recover this year. As for the intraday Bitcoin's outlook, its task is to settle at 20,000. Otherwise, the price might slip back to 20,400. If the asset manages to defend the high, it will be able to climb to $21,200 and $21,500. To sum up, investors are braced for another turbulent week. InstaForex analysts will keep you updated on all market developments. See you online tomorrow.